Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Michael Lebbon, founder and CEO of Emmi, to discuss why the financial market is key to solving climate change. Michael, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Great to be here, and thank you for having me.
You got it. And Michael, before we get into the financial market and climate change, introduce us to what Emmi does.
Yeah, for sure. So at Emmi, we talk about we're basically trying to unlock the power of capital to transition the global economy to net zero. Now, we do this by providing a carbon ecosystem that helps financial market participants to translate the requirements of this decarbonizing economy into quantified financial metrics that can effectively be embedded into the capital allocation process. Or another way to look at it is basically we help our customers quantify and manage their financial exposure to a decarbonizing economy, whilst also helping them take advantage of the opportunities present in that transition to net zero.
Tell us more about your belief that the financial market is key to solving climate change. Why and how?
So if we start with why to begin with, it's basically because the power of capital pricing. If we talk about, if you can objectively and transparently embed carbon risk and opportunity into the capital allocation process, then we can set global carbon targets, and the financial market will simply price these requirements, and you let the invisible hand of the market do its job. But then that's all well and good to say, okay, why? The big question is how. So first of all, what we need to do is you need to be able to plug all the carbon data gaps and basically provide a golden source of carbon information. Now, that's no mean feat. We have machine learning methods and big data science that my co-founder has pioneered. Then you need to provide a framework to help people understand how much any company or asset actually needs to reduce emissions under any possible global carbon scenario. And then once you've got that, you need to be able to translate that into financial terms that the market's used to and able to basically use. Think credit ratings, but for carbon.
So Michael, you've been talking about objectivity and data. Is climate a risk or an opportunity for investors, and why?
So we think it's both. And we say that, we think it's both because by definition, in any risk, there's always an opportunity if you can manage that risk. And when you think about it, investing, you can't really make a return unless you take on some form of risk. So, but let's just use a quick example for that. So let's think of a traditional car manufacturer, not Tesla, one that basically makes a lot of money from selling internal combustion engines. Now, this car manufacturer right now has a lot of risk and large exposure to a carbon constrained or a decarbonizing world. However, if you believe that this car manufacturer can make the transition to net zero in time, and you can quantify the risk so you're happy to hold it, then when that transition occurs, you actually potentially make more money, because right now, a lot of people in the market may not want to touch that car manufacturer because they believe it's unloved, it doesn't, it's facing the wrong way, and it's going to be gazumped by this transition. So it's really how you manage that risk as to whether this is just a risk or an opportunity.
So share with me a use case how Emmi bridges the worlds of climate and finance.
Yeah, so it's probably best if we're working with asset owners predominantly. We started working with some banks and asset managers as well, but let's talk on the asset owner side. So basically, asset owners are coming to us and we're helping them to map their entire portfolio's carbon footprint. So that's listed equities, private equity, corporate bonds, government bonds, real assets, infrastructure. Now, this is known as effectively their financed emissions. So that's good, but that's not enough. That doesn't bridge towards the world of finance. That's just, this is your carbon footprint. Then what we help them to do is we help them to understand what the emission reduction requirements would need to be for each of the underlying assets under various carbon constrained scenarios. Now we are starting to move to, okay, now we understand where these assets need to go. Now, once we have this baseline, we can then start to impute expected capital losses that could occur across their entire portfolio based on what the carbon scenarios are expected to be. And once you've got that we've translated their carbon footprint into reduction requirements into financial numbers, they can then start integrating this into their risk budgeting, processes, their strategic asset allocation work, and then basically as they do for any other investment risk. So they do this for credit risk, they do it for inflation risk, they do it for market risk. Now they can treat carbon as just in that same process. And so we talk about the goal is integrating and treating carbon like any other investment risk. So it's properly priced. And as I come back to what I mentioned before, this lets the capital allocation process get us to the required decarbonisation targets, because we work with the asset owners to say, this is what we think the targets need to be. And then we work all the way through from their carbon footprints to the reduction requirements to financial numbers, and then help them integrate that into their strategic asset allocation work.
Right, and that's what investors want, is quantification. So Michael, to wrap up here,
Yep.
what does your collaboration with Nasdaq look like?
So it's been great working with Nasdaq. It's we have a commercial agreement with eVestment, and this is where we leverage their expansive portfolio holdings data, and this really helps us to basically help map our customers' carbon exposure much quicker. Because at the moment, data's all over the place, and customers have to go and get portfolios manually, and this is just as much as saving them time as it is a carbon exercise as well. So working with eVestment, we can streamline this process for our customers and basically get them to the answer much quicker, so that they're not spending hundreds of hours manually doing data aggregation. They can spend time on the value add as being investors.
All right, Michael, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.